The Great Recession lasted from December 2007 to June 2009 and was the biggest economic downturn since World War II. And now, a decade later, there is still talk and fear that another one is here. The resulting anxiety and panic have people looking for advice on how to prepare and what to expect. And, well, who better than Mark Cuban to answer those questions? So, what does the billionaire have to say about the recession? How does he plan on surviving it? And what companies is he investing in? Let's find out. First, is a recession really coming? We're all concerned about a possible economic downturn, and like many other people, we're also scared about rising inflation, unemployment, and other issues. Rents are expected to rise. Rising interest rates will make homeownership unattainable for many working-class people. To make matters worse, the economy is unlikely to improve anytime soon, according to Jonathan Ponciano's Forbes article. The United States economy unexpectedly shrank by 1.6% in the first quarter, the worst performance since the COVID recession. Meanwhile, a growing number of analysts, including those at Bank of America, predict that the economy will shrink again, resulting in a technical recession. What happened the last time Mark Cuban predicted an economic collapse? Mark Cuban recently compared the current surge in day trading to the dot-com bubble. This certainly feels like it, Cuban said in an interview with Real Vision. He continued by stating that novice traders, many of whom are placing leveraged bets on risky equities, are, quote, doing the same thing they did in the late 90s. Many investors will be alarmed by Cuban's comparison, as the Shark Tank star and owner of the Dallas Mavericks famously predicted the dot-com crash back at the turn of the century. However, Cuban anticipated the dot-com crash and took steps to safeguard most of his fortune. To understand how Cuban pulled this off, let's give you a little bit of backstory. You see, in April 1999, Yahoo paid $5.7 billion for Cuban's online radio startup, Broadcast.com. As part of the payout, Yahoo also gave Cuban $14.6 million of its shares. Yahoo's stock price at the time was around $95 per share, valuing Cuban's investment at over $1.4 billion. Now, Cuban could have easily sat back and counted his money, but he sensed the tech industry was overheating and feared his stock, which he couldn't sell right away, would become worthless if Yahoo ran into problems.
Knowing that it got me to the point where I could hedge all my Yahoo stock, and in case, but if the market crashed prior to that, I was as good as I could be.
This is when Cuban asked for help from his longtime partner, Goldman Sachs. They built a collar in which they sold calls and bought puts. Acquiring put options was a sort of insurance because it guaranteed he could sell his Yahoo shares at a strike price of $85 if the stock went below that level. Selling call options meant pledging to sell his Yahoo shares at a strike price of $205 if the stock rose above that level, limiting his upside while offsetting the cost of acquiring puts. Long story short, the hedge worked out perfectly. And while the tech bubble grew for several months, pushing Yahoo's stock price beyond $230 by January 2000. But, just as Cuban had predicted, the bubble eventually burst a few months later, and Yahoo stock plunged. Without his safeguards, Cuban's net worth would have also plummeted. Now, if anything, this story only strengthens our confidence in Cuban's advice. And with that in mind, here's how Mark Cuban suggests you survive a recession. The first thing Cuban offers is refinancing debt, which is pretty sound advice given the economic condition. A lower interest rate means less money spent on interest as you make your way through repayment. That said, people's loan profiles and goals vary, so examine the health of your credit score first to ensure you're qualified for a better rate. And be wary of headline loan refinancing numbers. They may not be what you can truly lock in for your loan. You should also be warned that many lenders' lowest advertised rates are variable, which means that the rate may rise over time. Fixed rates, on the other hand, remain constant. They are also now low and may be a safer, wiser choice for many refinancing prospects. As for student loans, if you have federal loans, be careful. According to Betsy Mayotte, founder of the Institute for Student Loan Advisors, almost no one should refinance their federal loans. This is because federal loans have benefits that private loans do not, such as loan forgiveness programs and payment schedules that adjust based on your income. When you refinance, you forfeit those safeguards. Cuban also thinks that saving as much as possible is the key to surviving an economic downturn like this one. This is because the greatest opportunities arise when you are one of the few people with money. Now, obviously, Cuban is not the only well-known businessman to offer this advice. Octogenarian investing legend Warren Buffett has a similar philosophy for investing. Buffett wrote in an opinion piece for the New York Times in October 2008, "A simple rule dictates my buying. Be fearful when others are greedy, and be greedy when others are fearful." In other words, if you have the potential to invest while the market is down and prices are cheap, take advantage of the opportunity. This is pretty solid advice since it's true that some of the largest companies and businesses will suffer major earnings hiccups in the short term. But you see, one of the fundamental things about investing is that you never look at the short term. This is because when the recession passes, most big businesses will set new profit records in 5, 10, and 20 years. And who wouldn't want a piece of that pie? But if you don't think you can pick up stocks like Warren Buffett, Cuban suggests putting your money into an S&P 500 SPX fund, something that his fellow Shark Tank judge, Kevin O'Leary, also suggested. According to Cuban, the third most crucial element to investing is to understand the economics of the company you work for and the impact a slowdown would have on your career. He suggests educating yourself about your employer's business model, how the company produces money, and how and why an economic downturn would affect the employer. With that knowledge, you can be proactive. And this is because if you understand the risks, you can foresee or at least have a rough knowledge of how an economic change would influence your job. The thing is, too many people are caught off guard by layoffs when they could have predicted it and possibly planned ahead of time. And although planning ahead might sound like super generic advice, there's a reason why so many people say this. It works. But surviving a recession isn't all about investing, though. You also have to know how to spend your money. Cuban has a really simple piece of advice for that. He says that no matter who you are or how much money you have, if there's a recession on the way, live as much like a student as you can. Because the lower your bills, the lower your stress. He means that people should make a conscious decision to avoid overpaying and buying products they cannot afford. They should also tread cautiously while making purchases and refrain from wasting money on items they can live without. Mark Cuban advises living like a student in order to have as much money in your bank account as possible. And if you ask us, even if we don't experience a recession, it's never a bad idea to cut back on your expenses. We suggest that you keep your spending to a minimum. Spend your money just on necessities. If you want to save money on rent, live with roommates. Even if you only save $500 per month, you could easily save $6,000 in a year. And Cuban is not the only one giving this advice. According to serial entrepreneur, self-made millionaire, and New York University professor Scott Galloway, your financial comfort and ease are determined by your spending, not your income. Galloway cited his father and stepmother as great examples. He claims that they only receive $48,000 per year in Social Security and pension benefits, yet they spend $40,000 per year. They are rich, Galloway stated. They have more money than they need. Now, this next one may come as a surprise, but Mark apparently doesn't want people to be listening to any experts. He tweeted, "Whether we like it or not, we live in a global economy. We don't know what combination of big and or little things will make things better or worse till they happen." So, to help understand what Mark is going on about here, you need to know what market watchers are. They are basically the people who keep an eye on a variety of economic indicators in an attempt to forecast an impending recession. These include global trade conflicts, geopolitical crises, global uncertainty, consumer spending, bond yield curves, GDP growth, business profitability, manufacturing levels, and the job market. However, historically, the best that forecasters have been able to do consistently is acknowledge that we're in a recession after we're in one. This is why Mark suggests people not listen to these experts on whether or not a recession is coming. In the same thread of tweets, Mark also told employees to be honest with themselves. He wrote, "Employees with no self-awareness always get fired first." Now, this is a point that Cuban has made many times before. He believes you have to be able to know how others see you. However, this isn't the only advice Mark had for employees. He also claimed that during an economic downturn, you want to be valuable at work. And what does he mean by that? Well, according to Mark, valuable employees are those who reduce their boss's stress. They're the ones who are more interested in creating revenue than creating drama. And they are the ones that end up surviving when downsizing comes knocking. So, where does Cuban invest his money? Okay, to clarify, the equities we're going to talk about now were chosen based on public statements made by Cuban about these companies. 1. GameStop Corp. GameStop Corp is a specialty retailer that sells games and entertainment products online and in stores in the United States, Canada, Australia, and Europe. On September 7th, GameStop Corp reported a 4% drop in second quarter revenue of $1.14 billion. Hardware and accessory sales accounted for 52.5% of total sales, up 51.5% from the previous year, while software sales declined 27.9% from 33.5% the previous year. In February of last year, Cuban stated that Wall Street Bets was changing the way the market worked, recommending users hold on to GameStop Corp shares in order to help the company in the long run. Number 2. BlackBerry Limited. BlackBerry Limited is a global provider of intelligent security software and services to businesses and governments. BlackBerry announced on November 16th that it is expanding its worldwide network of BlackBerry SecuSuite partners in Asia-Pacific to provide anti-eavesdropping technology to protect real-time communications across the area. Cuban stated publicly that his kid was trading in BlackBerry Limited shares after receiving stock market information from social media platforms such as TikTok and Reddit, stating that these platforms were assisting young people in trading better than the experts. Number 3. AMC Entertainment Holdings, Inc. AMC Entertainment Holdings, Inc. operates a theatrical exhibition company. AMC Entertainment Holdings published third quarter earnings for the period ending September 30th, 2022 on September 30th. Total revenue increased to $968.4 million from $736.2 million in the third quarter of 2021. Cuban claims his son has also invested in the company as it has gotten a new lease on life by investing in many new ventures aimed at bringing back moviegoers. Alright, that's it for today's video. Thanks for sticking around to the end. We'll see you in the next one.